Okay, Mike Whitney, writing over at Counterpunch, wrote this piece, Titanic Stock Bubble Fueled by Buyback Blitz. The headline, The Rich Get Richer. And, I share that with you. It's worth referencing, but I'm just basically going to translate this. A lot of people have been asking, if the economy is so bad, why is the stock market going up? Why are we hitting record highs in the stock market? Because stock prices, in theory, should reflect positive economic activity by companies. And it used to be, by and large, that was the case. But in the 1980s, the Reagan administration changed the tax rules for compensation of senior executives in companies. There was this rationale. The rationale for this was called the ownership society, you may recall. And the idea was that not only do we want average Americans to feel like owners of our economy, in other words, get them out of pensions and get them into 401ks, get them to buy stock and get them to participate in the stock market. Not only do you want average Americans to do that, but you also want the CEOs and the senior executives of the companies to be thinking as if they were owners of the company rather than simply the chief executive officer or the vice president in charge of development or product marketing or whatever it may be. And the theory was that if the senior management and the owner and the CEOs of the corporation thought like stockholders, thought like, investors, that would be better for the business. Turns out it was a lie. It was a scam, actually. It wasn't just a lie. I mean, it was a fairly predictable scam. And the way that they changed the rules was that it used to be that, up to $1 million, a corporation could deduct up to $1 million in executive compensation from their taxes, when they pay their employees. Typically, a business pays employees. The employees are an expense of doing business, and it's deductible. And the cap was at $1 million. I think it's at $2 million right now. And so, and that was it. It was illegal to compensate CEOs and other senior executives in any other way than just as a paycheck and a bonus. I mean, they could get bonuses, but all of this was subject to ordinary income taxation, which, before Reagan came into office, was a top rate of 74%. 74% didn't even, I don't think it had started to kick in at $1 million, but you were getting close. You don't pay 74% on every penny you earn if you're rich. The first 10,000 you pay nothing on. The second 30,000 you pay what a person making 30,000. It's called progressive. Each stage has a different. So anyhow, the Reagan administration changed the rules of the game so that the executives could be paid in stock. Now, if you hold the stock more than a certain period of time, I think it's 6 months, might be a year, and then you sell it at a profit, you get what's called, you are in a tax category called long-term capital gains, where the top tax rate, instead of being the 39%, which is what people pay who, earn their living by actually doing things and making things. Instead, you pay the capitalist tax rate, the capital gains tax rate, which used to be a maximum of 15%. I think it might be up to 20% now, I'm not sure. But you pay a lower tax rate. So what started happening was that CEOs started behaving in a way that was designed not to help the company, but to help the share price, the stock price. Now, it used to be that CEOs had a variety of constituencies that they had to answer to. They had to answer to their employees. They had to answer to their customers. They had to answer to their community in which they did business. They had to answer to their suppliers and to their other companies, and they had to and the other executives in the company, and they had to answer to their stockholders. Okay, so 5 major constituencies. When they started getting paid with stock, they started saying, to hell with the employees. I can cut 10,000 employees out of this company and jack up my stock price because my labor costs just went down, particularly if I ship that work over to China. So they started laying off employees all over the country like crazy. This fad started in the 80s, and it continues to this day. With regard to the customers, they started saying, to hell with the customers. Who cares about the customers? We'll sell them cheap junk made in China. It doesn't matter because it's all about the stock price. So if we can make the company more profitable, Cool. We'll buy cheap junk and sell it to our customers rather than good, long, endurable, made in America stuff because it'll jack up the stock price over the short term. With regard to their community, they started saying, to hell with the community. Who cares about the community? My job is to jack up stock price. And so if that means that we're going to close a factory here and move it to a lower wage state or move it to a lower wage country, big deal. We don't owe the community anything. And, and the same thing, their customers, their employees, and so on. So the only loyalty the CEOs now have is to stock prices. So back to the question, why has the stock market gone up so significantly? It's the most significant stock market rise, I believe, in the history of the United States. As a percentage, it might be matched by what happened after World War II. But we're seeing this explosion in stock prices. Why? It turns out the reason why is because what these executives are doing, what these CEOs are doing, is they're having their companies borrow money at super low interest rates because the Fed is keeping the interest rates below 1%. They can borrow money at a super low interest rate, load the company up with debt, which you would think would hurt its stock price, but then use that debt to buy stock in the open market and retire it. So if there's a million shares of stock out there, and they can, or a billion shares of stock, say, and they can buy 100 million shares and take them off the market, then each share is now worth 10% more than it was. And so the stock price just literally automatically goes up the next day because of the share buyback. And then the CEOs cash in their stock. They just made a profit. And that's what is driving the rise in price of the stock market. Now, the stock market is not going up because American businesses are doing well. It's not going up because American businesses are generating innovation and great new things. It's going up because of these company stock buybacks. And the minute interest rates begin to go up, and they will, and this has got to be the thing that keeps Janet Yellen awake at night. The minute stock prices go up, companies are going to stop the stock buybacks, and the market is going to collapse.
You're listening to the Thom Hartmann Program. Call 202-536-2370.
So 2 lessons out of this. 1, keep a very, very close eye on interest rates. And number 2, this wouldn't have happened if it wasn't for Reaganism.